is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Oh, look who we have.
It's a beautiful day. Got our man, Jim from Minneapolis. We gonna take it by storm?
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7.5 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks, and a great week. Always do your best. Take action on your ideas. Doing your best means to take action on your ideas. You have many great ideas in your head, but without action upon an idea, there'll be no manifestation, no results, and no reward. Market-wise, let's take a look at it out here. We have the Dow Industrials down 780, S&P's off 88, NASDAQ off 271, gold up $8.80, trading at $16.57 an ounce. Silver flat, $18.52. Light sweet crude off $1.82, $51.56 a barrel. Notes and bonds. You get the 10-year up 25 ticks, 132.21. The 30-year up a full point plus 21. Plus 24 ticks at 166.23. And King Dollar. King Dollar up 82 ticks, trading 99.344. The euro is out here trading at a price point of 108. The yen is at 110.81, and the pound is 129 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, first we're going to get into the futures. You have we haven't seen a volatile move like this, folks, realistically, since probably 2009. The type of move that we had out here. Inside the future market, bottom line, on Friday, we had closed that baby out at 3339, and you got down today to 3213. So you're talking about over 120 points. Your swing area down here is 3212. We hit 3213, which is really wild. Bottom line is that you come down with way too much volume. If we go to the SPY, what you're looking at the SPY, what you're going to see out here is that the SPY's already done 110 million shares. Friday, bottom line was option expiration day. We did big volume there. We came down 113 million. What I expect we're going to see is a swing point that was established out here on the 31st of January. I believe that's the 31st. That is laying out at 320. So I expect that number's going to get broken, number one. Yeah, we'll get a small bounce. I don't see a small bounce out of here right now at all, not even close. Because what ends up happening, folks, when you get a downdraft like this, the bottom line is that the dippers have been in here on a continual basis. Those dippers have getting smoked. Well, let me put this up, and you'll see intraday what has already happened. This is just a change of venue in a monster way. Because what you have here is that we bring this right from when we opened this morning. You're going to see we got down to 3250 at approximately 9:30 in the morning. Bottom line, you did a nice little bounce up, 3260, and then they took it south big time, 3260 to 3213. No S&P trader is going to stay in that stock. So the bottom line is that you can expect high volatility as we come into this close out here. The larger trend has been broken, and it's broken with conviction. When you break something with conviction, if I put the S&P cash up here, what you're going to see is, and this is quite a break, because this is a break that goes all the way back 5 months ago. So if we take a look at this, what you're going to see, we bring it right back to the September area. It's a classic, man. I mean, you're talking about a cash S&P, let's say the next couple of months can get down to 28.55. And right now we're laying out here at, what, 32? You know, so this is a big number. No two ways about that. NDX 100. Now, the NDX 100 led us up. Bottom line, leading us down. You know, what you have out here, of course, in 3 days, you're bringing this back all the way. Why isn't, I can't picture whether my date's not coming up as easy as it used to come up. So you're coming back to the beginning of January in 3 days. Your first leg inside, let's go into the NQH. So if we go inside the NQs, we bring this up. You got a low today of 9,041. Right now you're at 9,158. And if we take a look at this one here, bottom line that, you know, got back into, you're trading actually, yeah, in the middle of January out here. And I suspect this thing, let me put the Qs up. This has game down somewhere into like 8,600, and right now you're trading at 9,158. Gold contract out here. Let's take a look at the gold contract. Gold contract got up to a price point today of 16 GCJ. No, GCJ. GC. We got up to 1691. Traded, hasn't held price. It done 635,000 contracts. Bottom line, this is one of the reasons I love gold, actually. Bottom line, folks, is that you did 635,000 contracts. 1705 was your price projection. Bottom line, wasn't held price. You're at higher high, tremendously higher volume. What this sets up now, I'm going to put the continuous contract up, and what you're going to see here, we're not only going to go after the all-time high in gold. I suspect what this is starting to set up is a very large ABC structure on the way up, and this is a monster, and it's a monster that actually started in 2001. So we'll see how this shakes out. The first price projection, I suspect, is going to be up to this 1920. The larger issue, though, is that we break that with volume and get up somewhere into the 2,500 mark. You know, we'll find out. We'll see how that shakes out. And what is it going to be about, folks? It's still about the note and bond market. 10-year yield, if we take a look at this, both the 10-year as well as the 30-year are in confirmed ABC structures on the way up in price, down in volume. And when you see this, it's just hard to comprehend and wrap your head around it. But bottom line, this 10-year, let me put this back here. You're going to see you're right next to the all-time low right now, which is 1.31. We hit 1.35 today. The B point on this is 1.4272. We broke that with conviction today. That sets up, I get the number, it's 0.1 or 2 something. The bottom line is that that's flat rates. The 30-year, we are already at an all-time low. In the yield of the 30-year, but the 30-year is also saying that that's going to go flat too. Hold on for the ride, folks, because it's going to be a wild one. Dow down 844, NASDAQ off 300, S&P's down 95. We'll come right back.
Folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's off 830, Nasdaq's off 296, S&Ps are off 94. Let's go over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the hour. And don't forget, folks, every trading day right here, Steve's got a great show. 1 to 2 Eastern Standard Time. Also has a great newsletter, Mastering Probability. Now, very easy to get this newsletter. Come over to our website at TFNN. You hit newsletters, you hit Mastering Probability. You're going to hit subscribe. You can get it for 1 month for $149. You can get it for 6 months for $695, which is a savings of $199 or 22%. You can get it for a year for $1195, which is a savings of $593 or 33%. They all come, folks, with a 30-day money-back guarantee. Steve Rhodes, what's going on?
Such a boring day. What are we going to talk about?
It's a beautiful thing, brother. No doubt. No doubt.
Yes, absolutely. Talk about volatility. And that's really the first place, Tom, that I thought that we would start. And what I want to do is kind of give folks maybe a view of what to be looking at this evening. And really, especially if you're an intraday trader. So I want to be able to do that. So to start with here, this first chart or really set of data points that we're looking at, the very top portion, we've got the ES mini down 96 points right now, but the spot volatility index is what I want to focus on. And it's printing right now at 2380. And the important thing is taking a look at the spot volatility index and then all of its forward futures contracts. So here I've got from March through November. And what we can see is even the furthest out contract, or in this case here, October, it's printing at 2120 in the futures contract. So we've got this backwardation. When we have this, what I like to do is I like to take a ratio between the spot volatility index and take a look at what its 1-year index is doing, what its 3-month, what its 6-month is. On this bottom panel right here, Tom, this happens to be the 3-month version. And when there's a ratio that gets above 1, that's in essence dividing the spot volatility index by its 3-month counterpart out here, or vice versa. When it gets above 1, it's an indication of a bottom that could be forming, at least a buyable bottom or a bounceable bottom. So we've got the spot volatility index trading above everything. And what I want folks to understand is that is an unusual format, and it provides us with at least a nice volatile trading opportunity, or at least a very sizable counter trend rally. So that's the first thing. The second thing with regard to spot volatility index, and it's an amazing tool for us in providing us with some insight to put this together with other patterns when I take a look at trading the equity futures contracts. So here, Tom, on this chart, we're taking a look at the top panel is the S&P 500, and it has a number of blue and green arrows. And the bottom panel takes a look at the 1-day rate of change of the spot volatility index, the difference between the close on Friday and where it's trading at right now. And if you look at the very bottom panel, you'll see it's printing at 38.93. So we've had a 38%, nearly a 39% as we speak right now, one-day rate of change. The blue arrows in the S&P 500 are time periods where there's a one-day rate of change greater than 10%. And what we typically see in the overnight action is some type of bounce or bottom in the marketplace. So I would prefer right now just to focus on the bounce, not necessarily worried about whether it's a bottom or not. And on this chart here, if I go to other days where we've seen these high, and this is where it's so cool, because what happened, what I want folks to do is I don't want folks selling into the end of the day here, because it just isn't supported based upon looking at these technical patterns. So for example, back here on August the 5th, there was a one-day rate of change of 39%. And that's right where that blue arrow is. In fact, what the market was doing right then, we can see that the S&P 500 was forming a bottom. It moved sideways, but the following day, it didn't move lower. It was an inside day out there, and we can go example after example. Now, does it work 100% of the time? It does not. It's in like that 90%, 80 to 90% category, which is a wonderful thing. Now, I go from the spot volatility index to oversold type readings out here. And one of the oversold readings that I like to take a look at is the advanced decline oscillator. That's the difference between the 19 and the 39-day exponential moving average of the advanced decline line. And that is panel 2 on this chart that we're looking at. When that gets down to the minus 150, you see on the bottom of my chart, you'll see a yellow horizontal line. When it gets down below that 150, that is true oversold territory. So when I put we're in oversold in the New York Stock Exchange, so the wider market out there, I take a look at the one-day rate of change of the spot volatility index, and I take a look at the backwardation that we have inside the spot volatility index versus its forward futures contracts. All of that sets up for some type of nice overnight rally out here. And I say overnight because right now we've already received the bottom signal. So unless within the next 40 minutes out here, we see another push lower and take out the lows, the low is actually already in. And this is a 30-minute time frame chart. And Tom, what you and what folks will see out here, they'll see these black diagonal lines. Now, those black diagonal lines are automatically drawn by my system. There's nothing here that I'm drawing. And what they're doing is they're identifying, these are the tools involved with identifying what I refer to as the Rhodes Momentum Indicator, top and bottom. They work for all time frames, all instruments out here. In this case here, this is showing price pushing lower with less relative energy. It's like playing a game of liar's poker, but you already know what the numbers are that you've got on your dollar bill or $100 bill, what have you, versus the other person. In this case here, this is the liar's poker. This is the like taking a ball and being in a pool and pushing it down and trying to stand on it. Eventually, it's going to pop up. Well, in this case here, we already have the bottom signal. Now, is it the bottom signal that tells us that we have more than just a little bit of an intraday counter trend rally right now? And the answer is no. Why no? Because price hasn't taken out any resistance yet. As you pointed out, we've seen a couple of rally attempts out here. In each of these rally attempts, I have the Rhodes Momentum Indicator signals out here, but price was never able to take out resistance. So what I can do is share with folks what resistance level is right now on a 30-minute time frame, but that could change at 7 and 8 and 9 o'clock tonight. But right now, the number is 32.62. And if price closes over 32.62, we're going to see price move all the way up to 32.94. Now that's 50 points from where we're at right now. That's a great trade if you can get that on. So I would be watching for that in the overnight action. What's really interesting here is if I take a look at the ES Mini has not taken out any key resistance levels. But, and I'm sure you would agree with me that the Russell 2000 has been a weak link out here. If we take a look at the 30-minute time frame chart for the Russell 2000, we're going to see that the last half-hour bar, so at 3 o'clock, price actually did close above the top of its profile. So here is an example of a resistance level that is attempting to crack. Now, I like to see 2 bar closes, whatever the time frame is, above resistance or below support to tell me about the potential of a change in trend. So in this case here, what you're watching for as we come into 330 is about 1632. We're at 1631.40. So a second close above that 1632 level, boy, that's suggesting a move up to 1666 in the Russell 2000 out there. And I finally put that together with all of that put together with what did the ES Mini do today? And And what the ES Mini has done thus far, I pull over the daily time frame chart, and these, Tom, are breakout levels that are based upon a tool that I use that are part of the nines, a Tom DeMark TD9 setup out here. And they help me to identify where price is most recently broken out. And inside the ES Mini, and these lines are not drawn in by me, this is based upon the patterns out here, support is held, which was 32.36. We're at 32.41. So what I want folks to be watching for overnight is some type of nice counter trend rally.
And folks, real easy to get Steve's newsletter. The way you do it, come over to our website at TFNN. You're going to go into newsletters. You're going to see Mastering Probability. You hit subscribe. You are off to the races. You get it for a month, 6 months, a year, all with 30-day money-back guarantee. Steve, you have a great one, safe one. Of course, we look forward to the show tomorrow.
Thanks, Tom. Take care.
Thank you. Stay right there, folks. Come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN has developed a daily programming lineup for traders by traders. We start every trading day live at 8:30 a.m. with Tommy O'Brien hosting the morning market kickoff as he starts the day off by breaking down everything you need to know about what's going on for the trading day ahead. At 9 a.m., Larry Pesavento takes your calls and questions live on the air for the opening bell as he hosts Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the Bull Bear Trading Hour. At 11 a.m., it's Kevin Hinks and Alex Coffey from TD Ameritrade Network with Fast Market. Basil Chapman at noon with the Tiger Technicians Hour. Steve Rhodes hosts the Trader's Edge at 1 p.m. Dave White with the Power Trading Hour at 2 p.m. And Tom O'Brien closes out the day for the final hour of trading live from 3 till 4. Don't miss a second of our daily programming lineup. Tune in to Tiger TV every trading day live at TFNN.com. Educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now down 890. You get the Nasdaq off 306. S&Ps are off 98. If we take a look at some of the higher volume equities out here, and we will have high volume today, folks. You get Advanced Micro down $3.40. You get Microsoft up 590. Apple's off 1260. Big numbers, no two ways about this. Morgan Stanley's down 267. Inside the Exxon Mobil, you want to take a look at these large integrated equities, folks. They've been on a one-way track, but this is pretty amazing. You know, we go back 2 months ago, Exxon was at 71. You're at 56. And if we take a look at this baby right now, the way this is shaken out, let's see. So, oh boy, this is intense. Yeah, this thing is going after a high volume low of $56.51. My God, look what we hit. We hit 56.52. And you're going to get, let's see, I got to bring it. I just brought that back 15 years ago, folks, okay? This is how intense this actually is getting. So this goes back to, why doesn't that come up? Figure this out. I don't know why the date. Okay, so this is going back to February of 2005. That's where Exxon's trading right now. Now, if we break this area, man, oh man, if you break this area, you're going to get down to 40 bucks. Big number. Chevron, let's go take a look at CVX. CVX, same number. This is just breaking a B point too. Has the volume behind the move. We take a look at this, and what you're going to see here, okay, so this has a little bit more support at 100. You break 100, though, and then you're basically down into somewhere about $94. No doubt, with big numbers here that we're talking about in a huge way, not in a small way. And, of course, the volume characteristic is going to be a monster out here today. If we take a look at the NYSE right now, we are at 787. They'll throw at least 500 million into this. We'll probably be about 1.2 billion inside the NYSE, and the composite's going to be a monster. Yeah, we're already at 2.5 billion on the composite, so we're going to see over 3 billion in the composite. If we take a look at the NASDAQ out here right now, the NASDAQ is coming into this lowest swing, and that lowest swing, let's see. I got to figure why I'm not getting the date. Oh, there's the dates. 1 second. No. Yeah, so you're going back to January 31st inside of that number. Big deal. The TLT, let's go into the TLT. We know that the 10-year note, 30-year bond, they both are in ABC structures, up on price, down on yield. And what you have out here, I believe that this just did it too. Yeah, the same deal. This is an ABC up. And it's a monster too. So your B point is 148.90. Your A is 111. So we got, what, 39 points? What did I say? 148. 38 points. 38. That's 172 would be your structure inside the TLT. These numbers, man, these numbers are pretty large. There's no two ways about it. This is just, this is a trip. There's no two ways about that. We go take a look at the, let's go take a look at some of the big monster stocks and see where they're going. So Amazon gapped down $78. Now, this is going to be dangerous for Amazon, because why? Because what happens is this, is that Amazon is into its gap. So the top of that gap was that 2002. We hit 1987. The bottom of that gap, folks, is 1872. Google. We'll take a look at Google. What do we have with Google out here? Google also gapped down. Its last swing point out here. It took out its swing. We're at 1428. We went to 1411. Bottom line, this thing gets down to 1363. And Facebook, and then we'll do a couple of chip stocks after that. Look at, so Facebook took its swing point out. Facebook's on its way down to, well, we already hit it. Actually, if you want to see something that markets, they just love going back to high volume days. Facebook just did it. 198.09 was the last time Facebook had any volume on the way up, which was October 23rd. I mean October 31st, and bang, we hit it. So big number, no two ways about that. We go take a look at Microsoft. So Microsoft in particular, because Microsoft, folks, one of the strongest equities in the marketplace, have been too. Had the volume behind the move, had everything. And Microsoft, guess what? You came in way too hard to its breakout area. You're in the breakout area. You get volume in the breakout area. That's saying that Microsoft also wants lower price. Now, NVIDIA. Let's take a look at NVIDIA, because this here is pretty amazing. And what I suspect we're going to have inside NVIDIA is that you're going to have a failure on the monthly basis. And if that's what we have, NVIDIA is going to be one of the largest consolidations inside of the chip business. So the high that NVIDIA had taken out is the high that was established out here. There you go. The October 2018 high was 292. We had volume there of 324 million shares. Now, NVIDIA crashed, folks. NVIDIA in 2018 went from $292, and in 3 months, it was at 124. 3 months. So pretty intense. What NVIDIA has done this month is that it got over that high, but dramatically lighter volume. Right now, we're at 197 million shares versus 324. So you're not going to get the volume in the move. If we get a close under 292, which we're under right now by 15 points, 13 points, bottom line is that that is going to set up the lower end of this consolidation, which is 124, which is just a mind blower. But guess what? That's how NVIDIA does trade. That's the other side of this deal. And that, no doubt, is one large number. If we go take a look at the SMHs, and the SMHs are important to understand how they trade. Why? Because the SMHs bring up the NDX 100, the NASDAQ composite, and then the composite drags the S&P as well as the Dow with it. And the SMHs out here has just blown away this swing point with volume. So the SMHs are trading 139, let's call it 140. The top of this range out here is 152. That's saying you get 12 bucks off, let's say, the 141, which is going to give you a 131. And if we pull this back, what you're going to see, the 131 also is another high volume low that was established out here in November. So I expect that's exactly where we're going to see this good old SMH run down to. So you're talking some big numbers. And, you know, in between this, yeah, you're going to get some bounces. But bottom line, the larger picture, folks, is that your uptrend is broken. It's broken with conviction. Bottom line is that, you know, we'll see the dip is in here. And, of course, you know, you're going to get the Fed. You're going to get all of this. But this is a much larger deal. And, you know, last week we were talking about, you saw that one sale, someone on the S&P, that was 568 million sale. One sale selling out. Stay right there, folks. Come right back. Dow down 920, NASDAQ off 318, S&P's off 101. We'll come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow's off 945. S&Ps are off 105. NASDAQ Composite off 328. Let's go take a look at the trend and the tick. So check this out, folks. Okay, this is pretty intense. You don't see this in markets that want to bounce also. So this is going to be a pretty intense night. We're only at 1.34 on the trend. On the tick, so what ends up happening is that you're going to get, if you're going to get some kind of a bounce out of that baby, there should have been more fear. This is showing that this, believe it or not, it's showing that there's no fear in this market and pure selling. We'll get to the VIX in a second because the VIX is a fear gauge, but that is a differential that people are buying insurance versus how they're buying and or selling equities. So in the tick, you only have a minus 1307 today. And what ends up happening is that minus 1307, oh, look at this. This is intense. And you get a plus 1,076. You don't get that either. So we got, what's that, 10 o'clock? We got this, looks like this morning, 24th, yeah, 1 o'clock. So the low out here is at 1 o'clock. And you only get the 1307. So what the tick means is this, folks, okay? This is New York Stock Exchange, basically tick index. And what it specifically means is this, is that the amount of sales on the bid or offer. So when you get 1,300, what that's saying is that simultaneously you are selling down out of all the equities inside the NYSE, 1,307 of them were getting sold on the down tick, meaning that sells, you bid and offer, you're on the down tick. That's not enough. What ends up happening when you start establishing bottoms is that you got, first you got to get to about a minus 14 to minus 1550. Then you need a second one that is basically 70% of that down tick in order to basically say that, okay, there's a flushing on the downside. You've had everyone selling down. We don't have that. You just, it's not even close either, you know. So I suspect that, you know, we'll see where this baby shakes out in the next couple days. What we do have, you know, and we're going to take a look at Europe today. You know, Europe, bottom line, finished down, you know, 3.3% in the FTSE. The Paris was down 3.9. The DAX was off 4. Spain was off 4, big numbers. You know, bottom line right now, the Dow's off 3.28. You know, probably down 3.5% or something when all said and done. The real question is, who is going to walk in the middle of this? And we know, you know, the past since the bottom in 2008 or 9, we really haven't. There's plenty of people that have never been in the market and really understands what a actual correction is. because we haven't had one outside of 1 or 2 day wonders. So, you know, I can absolutely see the context of, you know, what people, how they want to come into the marketplace, but it is what it is. Silver, let's go take a look at the silver market out here. Silver right now, we are trading at 1859. We hit 1892, and that's exactly what it was supposed to do. Bottom line, you hit it with volume. That means that, yeah, you gave it up on price, but I think it was 1885 to be the number, wasn't it? 1889. So silver did what it was supposed to do. It got up into that area. Bottom line, we did 135,000 contracts. Like the last one was 180. So that is saying that, okay, silver can probably pull back somewhere into 1812 again. Metals, folks, okay, this is well, silver has been much weaker than gold, number one. Gold is up $12. It was up a lot further. Gold just about finished its ABC structure on the way up. This is how the metals like to trade. That's the real bottom line. You know, when you finish ABC structures, whether it's up or down, I believe if we go over to the gold bugs index, you're going to see that that also hit its projective. Let me just look at this for a second. So we had an additional ABC up here. Let me see what this is. So the B point was 245. Yeah, so it was a 47 A to B, 57, 67, 69. Okay, so, and the gold bugs index, 269 was the A to B equals C to D. We hit 260. And the XAU, what we did out here is your B point is 108, your A is 86, 14, 24, you see 123, and you hit 113. So these babies aren't done yet. That's the real bottom line. You know, that's how this thing is shaking out. So it's this. We'll see where this goes. I was going to say that this is just the beginning of this thing, but my take is that it is, folks. Okay, and I know each and every one of these downdrafts, they've flipped right back in. I can tell you, technically it's a breakdown. Fundamentally, it's a lot easier understanding why the market has finally paid attention to the coronavirus. You know, they paid attention to it because you're talking about major supply lines coming from China that are going to be broken, and we're going to be, these large international corporations are going to be basically having less goods in approximately another 3 or 4, maybe even 6 weeks. You know, if you listened to the show last week, I was going through it in the context of box stores and the aspect of how this works, meaning the factories to the ports and coming in from the ports. You know, so you're talking about some major supply disruptions. What I suspect is on the table out here today, and this is where I was like, I was looking at this last night and I'm saying to myself, oh, this is interesting, because of the fact that the Chinese factories have been closed down for so long now. The real question is going to be is that the Chinese government is going to have to put huge amounts of money into the factories to keep them alive, because just picture that you have a small business and you're down for a month and a half. The bottom line is that you can go broke. That's what it comes down to. You know, most businesses don't have enough bread for a month and a half, on top of the aspect, and this is what is always dangerous, on top of the aspect of how much money were they already owed. You know, if it's a billing structure out, have they got that money in? And then the supply chain in China is pictured that all of us, that we have little factories in China. Well, I buy supplies off another factory in order to make what I'm making. I don't have enough cash to pay the other factory that I'm making. That person doesn't have cash for the other one. That's what you're seeing in this marketplace out here today, and it's real. It's absolutely real. You know, I heard an analyst on Bloomberg today. He was talking about just who won Providence. That yeah, it's bad there and it's not bad in the rest of the country. He's absolutely wrong. I know it is. I told you, I talked to them last week. I know I have a factory making me stuff over there. The bottom line is that that factory, okay, is not opened, hasn't been opened, will not be open for, who knows. We'll see how many more weeks. And Bottom line, that's happening all over that country. Dow right now down 939, Nasdaq's off 322, S&P's off 104. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's down 970, Nasdaq off 330, S&P's off 107. And this is going to be interesting, basically 9 minutes coming into the close, folks, because what you're going to get out here, you're going to get orders on close. And the real question is going to be, okay, are they going to sell right into it? Now, I suspect that they are, because what tends to happen when I started the program, I was talking about the amount of dips that came in intraday, and every one of the dips, the traders lost. So what happens on a daily basis when that happens is that people get more paranoid coming into the close, okay? Because, the way the market had been moving is that every one of those dips, they got rewarded and they go topside. This is just the opposite out here today. That has been happening. So coming into the close, I suspect you're going to get a faster acceleration, and then once the market basically is getting that faster acceleration, you'll just have one pretty large dump. That's kind of how these shake out as you do get into a close inside a day like today. Bottom line is that we go take a look at the, we're talking about the small caps. quite some time. The small caps, for some reason, you just don't know why they never could get to the highs of July of 2018, but they didn't. The lows, the last low that was established out here, we're talking about the low in January, that hasn't hit yet, and that low is 160 inside the IWM. We hit 161 out here today. I expect that's going to go right after that, and more than likely we're going to blow that away, because the small caps you want to keep your eye on, because what they have proved that they've been the weakest indice out here, and when you do get the weakest indice in a market that's going south, you'll get a much faster acceleration down in that product. That's kind of how that works. You know, bottom line is that you know, we're in correction, and as I said at the beginning of the program, folks, your uptrend that started 6 months ago is broken. It's broken with conviction. What does that mean? That means wide price spread, accelerated volume. That means longer term. That's exactly where we're going. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Come back and visit us. Tomorrow morning, Tommy kicks us off. Great show, 8:30 in the morning. Go get 'em, folks.